Welcome back to another daily recap for Monday, December 9, 2024. It's currently 8:07 almost, 8:07 a.m. Eastern. So there are three trend lines that price has been hanging around for the last week or so. And it looks like price could get under the lower of those three trend lines, and that could mean something currently. At this point in the morning, they are at 607.59. That's what the price in the SPY is. But under normal conditions, the reactions at these levels should produce base hit trades in the E-minis, and that's what our goal is. We'll come back to this chart after the market closes and talk about any trades that may have happened in the E-minis based off these levels here in the SPY. Catch you on the other side. It's now after 8 p.m., so we got a little pullback today. The spiders closed near the low of the day. Remember the trend lines that I mentioned this morning? Well, price got under the lowest of those three trend lines early in the morning, and it turned out to be a good clue that they were going to go lower. I'll show you what that looks like from a macro perspective later in this video. If you were playing by the rules, what did the trades look like? For the sake of continuity, we're going to assume you are acting as an algorithm and simply trading each of these levels the same way, no matter what. In other words, you weren't looking at other things like those trend lines and choosing to ignore levels perhaps based on the assumption that price might not react appropriately. So the first trade was a short at 607.39. I'm going to pull this down toward price, 5 cents. After 15 minutes, they were under this level. So going short was the ticket, and that would have given you a nice base hit of 4 S&P points as they fell, as they started to fall. The next level would have triggered a long trade at 606.65. There's my 5-cent buffer. There's no reason that would not have acted as support under normal circumstances. At this point, they were under that trend line, which I'll show you later, and that was kind of a clue. But we're treating this as a process. So you're going long at this level. So according to the rules that I've developed, you would normally buy again at this bottom level. So what this looks like, when you bought here, you're looking for a bounce to go up 40 cents or more in the E-minis, which is right here. They didn't do that. So normally what you would do, price gets out of the money. They're under this red line. That's the fumble threshold. The next level down, you would be buying at 605.81 typically and add to that position, expecting a bounce from this combined position. But they came up within 10 cents. So the low here was 605.84. Since they came up within 10 cents of this operating level and bounced from that area more than enough to satisfy a 4-point base hit, that means you don't want to trust this level again for a long trade if they come back into it quickly. That would have also kind of been your clue, could have been your clue, that if price fell hard into and through this level again, just like they did the first one, that being long probably wasn't the best position to be in at this point in the trading session. So they did come back and hit this level. So you're not taking the trade at 605.81 because of that near miss right here. But anyway, you're still in this long trade and you're out of the money. So you're looking for what I call a fumble signal, and it's a function of time. It happens when price gets below that red line that I showed you, that fumble threshold. So the signal was given when that trade was 12 points out of the money. So the plan is to reverse that position if there are no levels farther down within a certain distance that could provide support, and there was not. So after giving 12 points back to the market, you would have retrieved at least 4 more as they continued to fall. So the next trade would have been a short trade, this time at 605.71. Why? Because we're subtracting 5 cents from the precise level from the morning. This is what I call a recycle trade, and it's when you trade the same level on the other side after it's been satisfied once on the other side. In other words, this would have been your long trade here when it bounced earlier from the operating level. So you're not going to take any more long trades, but a short trade is viable if enough time has gone by when they're coming back up into it from the other side. So going short at 605.71 means you're looking for a base hit down here. Just took some time for this one to develop, but they did pull back down, and there is the last trade of the day. At this point, I would normally show you a recording of any trades, any live trades that I took during the day, but I don't have a recording because I don't have any trades to show you. I wasn't feeling well this morning, but I went ahead and went to the office. By the time I got set up, it was a few minutes before 10. They'd already been messing around with this level. I missed that trade in the morning. I did not want to chase it when they started to fall. And it really wasn't more than 15 minutes or so of being at the office that I asked myself why I had even gotten out of bed this morning. I felt pretty crummy. So I went home and I was MIA for the rest of the day. Tried to get some rest. It was good to step away from the screens for a while. So anyway, no trades for me. Here's a daily chart. I know this looks like a mess here. These are 3 trend lines, which will make sense when we look at maybe an hourly chart or something. But they were pulling away from this area. The first hour of the day is this red candle here. So while they kind of messed around, let's zoom in a little bit here. Well, they did kind of get above this lower of these 3 trend lines, which have been important. All 3 of these trend lines were from the original point of these trend lines. It comes from a pivot high over a year ago. But anyway, they fell away here back in November, and it looks like they're rolling over again. So it's not too surprising that they're, in the big picture, that they're pulling away from this general area of overhead resistance. And by the way, there was a lot of trades in this area last week, mostly based on these trend lines. So where are they going? Well, they didn't get to this gap. Here's a gap here left over from the 3rd of December. The close is 603.85. Barely got there, pulled up short from that. That was an area that if they came down from here all the way into that, that would have probably been really good support, and they could have bounced from there. But they came up short. But it's neither here nor there, because at least today during the open session, they didn't get down this far. But there are some retracements. There are some other levels that are important if price continues to fall. But this could just be a little reset at this point, and they could go back up tomorrow. But I don't know. Look what they did here back in November. Would it be too surprising for them to do something like that again? But in any case, I'll have more precise levels by the morning that will work. Most likely, 80% chance or better of them working for base hits during the day. The big picture, this is where we're at. Just pointing out what we can see here at face value. Here are the tracking logs. The first one is the playing by the rules log. You can read the notes. So really a wash, pulled 12 points, given 12 points back. So probably more realistically, if you had done everything precisely by the rules, you would have ended underwater a little bit because of commissions and a little bit of slippage. Then nothing for me. I took no trades. So here's where everything lands if you want to explore the averages and percentages and where they are to date. So that's a wrap for today. Thanks for watching. Hopefully by tomorrow morning, I'll feel a little better. I'll still run the numbers, and we can do this all over again. And we should have some more opportunities on the board if they start to pick up some steam and show a little bit more activity. Thanks again. I'll talk to you in the next recap video. Have a great rest of your day.